This housing market continues to get more interesting every day, and we have Goldman Sachs.
Interesting.
You know, the big investment firm, they went in and bought an entire community for $45 million, guys. Now, this is something that we have seen multiple times happen. We see all these like companies going in and buying affordable homes and then renting these homes back to the public, making a huge profit. So this isn't something new, but what's interesting about this is buying an entire community, right? Let's jump into this story, guys. It says Goldman Sachs backed firms buy an entire Florida community for $45 million. Man, that is so crazy. There's no end in sight for Wall Street Sunbelt sojourn. A pair of Goldman Sachs backed ventures gobbled up an entire rental home community in Florida last month for a cool $45 million. Fundrise Interval Fund and Growth REIT picked up 87 single-family properties in Brevard County as part of an ongoing southern spending spree. Now, if you guys don't know what's really going on, a Sunbelt is really popular. And why is Sunbelt properties really popular? Well, they're really popular because of the weather, right? There's a lot of sun, hence the word Sunbelt, because you know, the sun is on that portion of the country majority of the time. The weather is the biggest thing. People are flock more towards sunny areas than winter areas that have heavy winters or bad winters, like Chicago or New York. Those areas, even though they have really big populations, most of the time people will prefer an LA over a Chicago. Fundrise previously snatched up 120 development in Pensacola and has been pouring money into other rental developments in states like South Carolina and Mississippi. With rents continuing to soar and demographic shifts ongoing, real estate experts said Wall Street Southern appetite will only intensify. Now, once again, it is all about location. And with Goldman Sachs funding this, they understand exactly what's happening with the market. Not only are they trying to hedge their bets by investing in real estate, guys. That is what a lot of firms do. That's what I do. That's what all real estate investors do. Is when it comes to inflation, you're hedging your bets with real estate. When you have hard assets, you are hedging against inflation. And these firms are no different. They're just doing it at a massive scale, guys. And they know that rents are going to continue to go up. I have been saying that, guys, for I don't know. If you look at my videos in the past, I have done videos on how rents will continue to rise up. And if you want to get into rental properties, if you can find a deal now, then now is the time to try to get into real estate as far as rental property investments. If you can find a deal, just don't go in and overpay. You know my rule, guys. Do not overpay. It doesn't matter if it's your home that you're going to purchase, and it doesn't matter if it's a rental property. Do not overpay. But what I'm trying to say is that rental properties will hedge against inflation. And like I said, Goldman Sachs is doing this to do the same thing. They know inflation is going to continue to get worse. They know that we're going to go down a recession. And what happens during a recession? People lose jobs. Things are continue to go up in price. People will not have money to buy as much things as quote unquote going to Walmart or going to the grocery store because everything will continue to go down in a recession. So what will continue to go up during a recession? Rents will continue to go up because people will not be able to buy homes because maybe they don't have a job. Maybe they're using a lot of credit and it messes up their DTI. Who knows what the case may be, but I can tell you one thing. During a recession, rental prices normally go up, and this will be no different. You are seeing more and more of this from a guy named Johnson, told the Post. The attraction of Florida is the same as places like Texas and Tennessee, North Carolina. These places people are moving to and where we can expect to see future increases in population. Florida, he said, it has undergone a fundamental shift in the recent years, morphing from a second home and hospitality center economy to a year-round place of business. Now, I agree with that. I've started to see a lot of my clients, I've started to see a lot of people in general move from, areas like, Illinois or Ohio, especially a lot of Midwestern states where they're moving to Florida, and it's just no longer a place where senior citizens will move to retire, right? It's no longer that type of place. It's a place where you can live year around, and the taxes make sense for the state. You get to keep more of your money, and you start to see a lot of appreciation when it comes to rental properties or your home in itself. So that's what people want. And it's a great job creating place. All in all, it's a great place to move to. So I totally understand why people are moving there. Some critics have correlated Wall Street embrace of single family rental homes with unprecedented price increases over the past several years. Home buyers having their bid avalanched by corporation competitors with deep pockets. Florida has seen rent spikes by more than 30% overall, while other Sunbelt states have seen similar hikes. Now, here's the thing with these big corporations. They are continuing to push up prices. And how are they doing this? They're doing the old appraisal thing that domino effect that I have been talking about in my previous videos, where they go in and they overpay for these homes, which takes on a domino effect. An appraiser is going to then go look at the price of that overpaid house, that $30,000, $50,000, $100,000 home that a corporation overpaid for to win. They will then go look at that house and say, oh, your house is now worth $50,000 more because these guys overpaid. The domino effect going the other way is catastrophic. What that means is that you buy a home in Florida for $350,000, but the reason why it's worth $350,000 is right next door, Zillow or Goldman Sachs overpaid by $60,000, which pushed up the price of your house. So when the recession hits and a downturn comes, then you will feel the pain just as much as the corporation. But the difference between you and the corporation is the corporation has enough of these properties in volume to cover themselves, and you don't. You will feel more pain than the corporation because it's a corporation and you are an individual. You don't have the safeguards that a corporation have. That is the biggest issue that I have with this, is this domino effect and this crazy value system that is going on in these huge communities, and is going to be felt huge when a housing crash happens, guys. And then what's going to happen from that point is then the companies that, even though they have lost value in the overall value of homes, they will try to make that up with rent increases to cover up. But see, this is the thing. They may not be able to cover rent by that one single family home, but if you do it over 4,000 homes, a rental increase, you can then cover all of the losses that you had when it came to value. And then Johnson goes on to argue that corporation purchases remain a drop in the bucket in overall home transactions throughout the county. He asserts that even large-scale corporation purchases in concentrated area do not confer enough market power to dictate rental prices. Other analysts contend that the increased mortgage rates will now spur even higher rents, with would-be home buyers opting for the sidelines. Now, this is a great segue into what I'm about to talk about. The concentration, these large scale purchases, they're saying that they're a drop in the bucket. Now, once again, that is true. When you look at how much these corporations are buying versus everyone else in the entire country, yes, it's a drop in the bucket. But what we do have is these corporations going in, and he is saying that it does not have enough marketing power to control a whole market of what the rental prices will be. That can be determined, because if I am an investor and I take a look at, what housing prices are in this community, and maybe I'm outside that community by a mile or two, I'm going to probably raise prices based on that, because that is what people are paying. That is the market price people are paying. I understand what he's saying. And when it comes to a huge city like Tampa or Orlando, that one subdivision or one community isn't going to vibrate through the entire town of Orlando or the entire city of Tampa or Miami. It's not going to do that, but it does spread, and it will, creep out of just that community. So there will be some areas where you cannot control the rent, and rent will continue to go up. Rent will go up in a recession, guys. It will. So be ready for it. Rent will go up when these people like Goldman Sachs, Wells Fargo, Bank of America, and all these other guys, when they go in and they buy all of these 4,000, 5,000 single family home communities, rents will go up, and they will make sure that they will make their money. So you have to be prepared for that, guys. That's just what happens. And then third, rent will go up based on what we're trying to make up for in the rental market. We remember we did go through the pandemic where there was the moratorium on evictions and everything else. So we have a lot of people trying to make up. A lot of mom and pops, investors, they're trying to make up for all of the losses that they incurred when the pandemic was happening. You have to be aware of that, guys. So at the very end of this video, what is the whole point of this? These corporations are going in and purchase. The whole point of this video is to let you know exactly what's going on in this crazy housing market, and to let you know that rents are going up, and that these corporations are understanding that the home buyer will start to sit on the sidelines because mortgage rates are continuing to go up, guys. But I don't want you to be discouraged, because I always tell people, do not overpay. And if you cannot get into your home and you're going to pay these high interest rates, and you can sit on the sidelines and wait and rent, then I think you should do that. But once again, that is not me telling you, hey, you have to do this or you should do this. That is just my opinion. That's what I would suggest anybody to do. If you are in a situation where you have to purchase a home, then hey, by all means, do what you have to do for you and your family. As always, just research to help you make the best decision that you possibly can. I'm gonna need you to check out this next video here. It will help you learn about this crazy housing market and to get into your first rental property. Also, check in the description below. I have some useful links of getting free credit reports and whatnot, and I'll see you guys on the next one. Thanks.